Hello everyone and welcome to this video. Today we're going to be looking at a question 9, so management accounting question, which is a product budget, so a production budget. Of course with management accounting we have question 8s and question 9s. You do one of them. So we are Fox Limited, and Fox Limited has recently completed its annual sales forecast to December 2017. It expects to sell two products, regular at $270 and premium at $310. All stock are to be increased by 20% from their opening levels by the end of 2017 and are valued using FIFO method. Now we're given expected sales. You see that for regular and premium. We are given stock of finished goods on the 1st of 1st 2017, again for regular and premium. Both products use the same raw materials and skilled labor, but in different quantities per unit as followed. So this will more than likely be the case. It always seems to be the case with these questions. So regular, premium, material A, material B, skilled labor hour. Stock of raw materials on the 1st of 1st 17 are expected to be material A, material B, 9,000, 7,000, and note the prices as well. The expected price for raw materials during 2017 are 5 and 7, so they have increased a good bit from the end of 2016 to the beginning of 2017. It gives us the rate of skilled labor hour, €13 per hour, and the production overhead costs are expected to be €5 per skilled labor hour. So that goes back to our absorption questions that generally come up in question 8, where we would get all our overheads divided by whatever and then multiplied by whatever. And then we have fixed there as well. So there's a lot of numbers in this question, and that will always be the case with production budgets. What we need to know is we need to know the structure of the layout of the budgets, let's say. And then from there, everything else will be a lot smoother. So I have those as well, a template that we'll show you later. What we're going to do is we're going to break down or decipher some of the stuff that's in here. So I'll go with green. So we sell two products. Regular and premium, that's the selling price. So all stock are to be increased by 20% from their opening levels by the end of 2017. So those three words mean our closing stock in 2017 is 20% higher than opening stock. And that's all it means. Perfect. We use the FIFO method, which means when we're using raw materials, we'll use the smaller amount or the smaller cost per unit first, the 290, because we bought it in 2016, and then we will use the €5. So that's just something to, again, bear in mind. Now, we're given expected sales. So essentially with that, what we now need to look at are what I would call the segregation of raw materials and products. So we have this here. So our expertise, let's say, is in manufacturing. So we manufacture electric cars. That is our output. Our input, so the raw materials that go into our production, are microchips. So our expertise aren't in making microchips, they're in making electric cars. But we need microchips as the raw material in order to produce. So a raw material or purchases is a separate thing that we're going to be looking at as part of our production budget, which would be in materials. Whereas the output, electric cars, are our products. So I'm going to try and use yellow for, so our yellow is going to be our products. So stock of finished goods. So that's our stock. So anything that's stock related that we produce, I'm going to highlight. So this is related to it. And green, I'll just do the others. So stock of raw materials, I'll use red. Stock of raw materials on the 1st of 1st 2017. So that's about raw materials. This is about raw materials and the cost of raw materials. This is the skilled labor hour, so it's not to raw materials, so we'll leave that blank as well. So everything we need to know is there now. What I'm going to do is I'm going to do the closing stock of raw materials and products, just so we have it. So I'll just do it over here. Closing stock. So again, it's 20%, and it said for all stock levels. So that's why it's both for closing, for purchases, which is raw materials, as well as for our products. So we have raw material A and B, and we have product regular, and we have product premium. So with that, we just have to get whatever it was. So our stock of finished goods, so the first of 2017 is obviously opening stock because it's the very first of the first month. So 850 multiplied by 120%, or 1.2, 650 by 120%, and then you go up to the raw materials as well. We have 9,000 and 7,000. Again at 120%. We are then given 10,080, or 10,800, sorry, and 8,400. Here we have closing stock of product A is 1,020, and premium is 780. So that make life a lot easier as we move forward. So it's good to just write them down from the beginning. Now what we're asked is we need to prepare a production budget. The Excel file that I was talking about with all the different templates we need is right here. So the production budget is what we're creating, and remember, it's in units we're dealing with. So we're here now. What we want to do is, if you take it as a breakdown, we need to put our budgeted sales. So we have our budgeted sales there, expected sales. We add our closing stock, because what our closing stock represents is goods we have produced that we do not intend to use this year. Whereas opening stock is last year's closing stock. That's goods we created last year with the intent to use this year. So that's why it's less. Because if we have an opening stock, then we won't need to produce as many this year. So 13,000 was our budgeted sales. Our stock of finished goods, 850. And we had our 1020 is our closing stock. And I got them mixed up. 1020, 850, and it's negative. Perfect. So when we add all of those together, we get is 13,170. That's our budgeted production units. Now, if we do the same here, oh, it was not on purpose. So we do the same with product A or product B, 8,500. Our closing stock we had was 780. And our, so 780, and our 650 was our opening stock. No, I did not format these very well. There you go. Minus 650. And if you put all those together, what you get is 8,630. So there are, but these are the these are the amount of units we must produce for product A and product B this year. So again, why is it less the opening stock? Well, this is all about what you need to produce. It's a production budget. Therefore, if you have opening stock from last year, you're going to use that, so you do not need to create as many. So we don't, even though we need for this year 13,000 plus 1,020 units, because we're going to sell 13,000 and we need to keep over 1,020, because we carried over that 850, that will be used up first because we deal with FIFO, so we won't have to produce as many. So it's nice and straightforward. Now, you generally get about 12 marks for that out of 80, which is quite good. It is what, 15%? 12 over 80, yeah, 15% for that. Like, there's not much there. Now, so it seems like I have a number already in here. Raw materials purchase budget. I'll get rid of that. So next we need to prepare is a raw materials purchase budget in units and euros. So how much raw material must we purchase of material A and material B in units and euros? So now what we must do is we are asked to prepare a raw materials purchase budget in units and in euros. So this is our raw materials purchase budget that you can see. And I'm just going to change this to material A, and I'm going to change this to material B to make life easier for us. So this is just a template, so I'm going to have to change it. This is regular, and this is premium. I believe that's the name of it. Premium. So again, this is regular, this is premium. So our workings for the amount of materials we will need when we're producing it is the amount we need to produce. So 13,170. I'm going to multiply it by the number of materials, or the number of units of material, the number of kgs for materials A that we need to produce 1 unit. So 7 kg, so by 7, and again here material B 13170 multiplied by, so we need 5 kg from material B. So what do we get with that? 92,190 and 65,850. Now we go back to premium. So how many do we need to produce? 8630. We're going to multiply it by how many units do we need? From regular, 6 kg of materials A. So it can be a bit tricky at the beginning to get used to it, but once you've cracked it by doing 1 or 2 practice questions completely right, then it just becomes a breeze. So 8 kg of material B for that. So when looking at that, we should get here, so material A for premium is 51,780 and 69,040. And that looks right. Yeah. So we're going to add everything together. 143,970. So that's how much we actually need. Again, in not in euros, in units. So we need to buy 143,970 units is what we'll need to produce 13170 of regular and 8630 of premium. So here we have 134,890. So 134,890. Now add closing stock like we did when we were doing the production budget. opening stock, so the red stars, 9,000 of material A is opening stock, so 9,000. And for material B, the opening stock is 7,000. Material B closing stock was 8,400. And the closing stock is 10,800 for material A. Now, the purchase of raw material in kg, we just add. So we add. So when you put that into calculator, what you should get is 145,770. I was just going to say, I hope it doesn't give me euro, but it did, so I'll switch that. And then for material B, when you add that all together, it should be 136,290. Now, we look at the cost per euro, cost of raw material per kg. So we're going, this is what we need to buy. This is a raw materials purchase budget. So we're going to be using these costs here, €5 and €7. So €5 for A, €7 for B. So the one time you want the euros, they do come up. Cost of raw materials is then going to be the €5 by how many we need to purchase is that. And I will copy the formula over here. And those are our amounts. So raw materials purchase budget is basically just that. It's not that it's the most difficult thing in the world. It's just having a good structure to work with and understanding what you need to extract from the question. And generally you get 16, 18, 20 marks for that. So you've already got, let's say, 30 out of 80. So what's 30 out of 80? Is 37.5%. So as long as we get one thing right in the next question, just the smallest thing will pass the question. Obviously you want to do better than that. That's just looking at it. So now, on to the hardest bit, which carries the most marks. We have to prepare a production cost manufacturing budget. So this is all, everything we need is going to be in euros. So what I'm going to just write down here now is the total cost of purchases is going to be this plus this, 1,682,880. Now, these are just for my, what would you say, templates, so you know what to add, what to plus, what to minus. I'm going to get the x's out so that we can add them. Okay. Now, opening stock of raw material. So raw material 1. So we know that we have opening stock of 10,000, of 9,000. So this is going to be 9,000 multiplied by how much raw materials, the cost of raw materials was for opening stock, 290. So just bear in mind that this is 290, whereas above we were dealing with, how much was it? €5. So they've increased a lot. Now, so this is all supposed to be in euros, so I'm going to change this format into euros now. So now that's changed. So that's raw material A. So again, I'm just going to change these to A and B, not 1 and 2, because we'll just confuse ourselves. A and B. When we are talking about product A and B, it's going to be regular and premium. regular and premium. So material B is going to be opening stock 7,000 at 470. $32,900, perfect. We will add them together to go here, so equals that plus that. So 59,000 euro is the value of our opening stock of raw materials. We add the purchase of raw materials from above, so I'm just going to copy and I'm going to paste value. So that is this plus this. So less closing stock of raw materials. So what's our closing stock? Well, we know our closing stock is 10,080, 10,800. We have, because we're using FIFO, we have to multiply it by €5 and 8,400. That's with an equal sign. Multiplied by 7 is, yeah, here. So don't know why these aren't carrying over, but there we go. This is going to equal that plus that. Now we said this was a negative number, so just make it negative as we go. Perfect. And if we add them all together, we get 1,629,080. So our closing stock cost is much higher than our opening stock cost. Now we're talking about labor costs. So in this case, we'll go back to our table. What do we need to produce? So the skilled labor is 7 for regular. So how many are we going to produce? Well, we're going to produce 13170. So 13170. We're going to multiply it by the number of hours needed, which was 7. We're going to multiply it by the amount of euro needed for skilled labor hour. So the skilled labor hour rate, which we had was €13, which was that. Now the premium, 9 hours. So we're going to produce 8,630. It's going to take 8 hours and it's still going to cost €13 an hour. Sorry, 9 hours, not 8. So you can see how these things can get a bit tricky. So our total labor costs are going to be quite high, 2208,180. That's our total labor. Our variable overheads. So how do we get our variable overheads? So we are told that our variable overheads are based on skilled labor hour. So we're going to have, okay, so once we get that, we're now going to go to our variable overheads. So our variable overheads are based on €5.50 per skilled labor hour. So you can take from here really, so I'll just say is that, or we'll just copy what was there. And we'll copy what was here. Now, the rates are going to be different, but they're the same number of hours used. So €13 is how much skilled labor hour, but our variable overheads are 550, so that should be 550. Again, 550. We add the two together. 934,230. Fixed overhead. So this could be 325,500. 325,500. It's not going to be as a euro. Oh, it is. So cost of manufacture is everything added together. String is our fixed overheads plus our variable overheads plus our labor costs plus the materials we need to purchase. So 5,096,990. So a lot of money is being spent there. So that's generally about 24 marks for that. So a lot going for that now as well. So the very last bit before we get to theory is our budgeted closing stock per unit. So this would always kind of be the case of how the question is asked. So we need to calculate the unit cost of budgeted closing stock for both products. So how much will the unit cost on the 31st of the 12th, 2017? So the cost, the number of material one needed multiplied by the price per unit. So how many materials? We need 7. So again, just change this to A and this to B to make things easier. This is regular. This is premium. So the number of materials needed is 7. Multiplied by the price per unit for that raw material. So we, again, because we're dealing in 2017 and we're dealing with FIFO, it's going to be €5 per kg. We're going to have 6 by, again, 5. Didn't that work there now? 6 by 5. Material B, we need 5 and 8. So 5 by, I think it's €7. Yeah, and we need 8 by 8 multiplied by €7 as well. So the number of units needed are 7 and 5 for regular and 6 and 8 for premium. So 5 by 7 is €35 and €35 5 by 7. And we have 30 and 56. Perfect. Now, the labor costs. So how many hours of labor needed multiplied by the cost? So we need 7 hours and it's 13 is the cost. 7 by 13 and 9 by 13. 9 by 13. So 7 by 13 is €91. 9 by 13 is €117. So we can see that the premium is more expensive, which makes sense. Variable overheads, well, it's going to be still 7 hours, but at 5.50. So the labor hours does not change, but the rate changes for our variable costs. So we have 38.50 and we have 49.50. So I will make sure that that is to the nearest cent. Now, fixed overheads will be a bit tricky because we need to work out a rate. So we're still going to be using our labor hour rate. But we're looking at fixed. So our fixed overheads. So fixed overheads. So this is where our absorption stuff comes in. 325,500. So that's our absorption, or sorry, that's our total fixed costs. Now we're going to get all of the hours needed for regular and premium. So we know for regular, it was, just again, take this, 13,170 products at 7 hours. And labor costs here, we're producing 8,630 units, and each unit requires 9 labor hours. So the total is that 169,860. So they are. So what we're now going to do is we're going to have the fixed overheads divided by our total labor hours that we'll use in the entire year. So essentially we are coming down to €1.92 per labor hour. So we have 1.92 at, again, how many labor hours was it? Per unit was 7. And here the labor hours for product premium was 9 hours. So again, 7 and 9. So what do we get there? We get 1344 and we get 1728. Sorry, 0.28. Don't let it round up. Now we're going to add everything. Again, we're going to have to make sure. So the answer we get is 212.94. So we're going to sum all of these and get 269.78. And that is our budgeted closing stock per unit. So this is probably, so essentially now, production budget 12 marks. Take, for example, raw material purchase budget 18 marks. That's 30 marks. Budgeted closing stock per unit is 14 marks. Now you can do all of these without knowing your production / manufacturing budget. So you could technically do adjustment 1, 2, and 4 and get 44 marks, which is what, 60% essentially? 55%. Now, you should still be able to, the majority of this is just repetition, and practice. So the last bit here with the fixed costs. So we have to get an absorption rate for the fixed costs. The total fixed costs is 325,500. When we do absorption rates, it's always on either labor hours or machine hours. We're not given machine hours, so labor hours we have to use. That's the total labor hours divided by 325,500. You get €192. And that is that. We plug it in here, 192 by 7, 192 by 9, because they are the amount of labor hours that are needed per product, 7 and 9. And that is that. That's the majority of the marks, but we still have another question to do. So, we are told to define what is meant by cash budget and explain what useful information is available from a cash budget. So, we will take this and we will push it over to the next part of the question and answer it from there. So the reason I put up the solution here for the theory is that we should get familiar with giving them exactly what they have from previous exam papers, because that's where you get the marks. You have to have specific words. So the budget is about a forecast or a plan. So that's 1 mark. It's a forecast that summarizes the expected cash inflow and cash outflow. So it talks about the money, the cash you spend and the cash you receive over a period of time. So really straightforward, but you really have to hit those marks. It's a forecast that looks at income and expenditure, or inflow and outflow more like, and over a period of time, generally 1 year. So I would imagine if you said over 1 year, you'd get a mark. Again, cash inflow and cash outflow. We shouldn't say income or expenditure because it's, cash we're dealing with. The useful information available from a cash budget is it will anticipate periods when cash deficits will occur, allowing finance overdraft loans to be arranged. So you'd be able to see, well, we expect a cash deficit, let's say in July, because maybe we have a seasonal product, we're going to sell loads over Christmas, but then it will dip over the summer. So we need to then see, well, how will we fund the rest of our payments to get us through that tough period? It will anticipate periods when cash surpluses will occur, allowing short-term investments to be arranged. So vice versa, two completely opposite answers, but they both get you 2 marks. It will help in making sure that there are always sufficient funds available to meet the day-to-day needs of the business. So again, you could wing that on the day and get full marks, as long as you knew what a budget was and what a cash budget was. So nice bit of theory. Explaining what a cash budget is, people should get at least 2 marks because they should get forecast and expected cash inflow and outflow. So really they should get 3 out of 4, if not all 4. And then the useful information, yin and yang. You can see where you've cash deficits and get financing. See where you've cash surpluses and how you can invest that money. So that was the question. Again, the production budget, it's the same thing every single year when it comes up. And because of that, we should anticipate how we answer them. The best study you can do is practice questions. And that goes back to everything in accounting, full stop, no matter what you're doing. No matter what you're doing, it's all about practicing accounting because all the questions are always the same. The numbers are just different. And they throw in the odd adjustment here and there. That could be different as well each year. So by learning off these templates that you would be able to find either from me, you'd be able to find them from a solution on examinations.ie and note it down yourself for the production budget and then the cash budget as well. So we'll just take a tiny look at the cash budget. So again, it has a production budget, the exact same, raw materials purchase budget, the exact same. But when you talk about cash budgets, it's what cash inflow and outflow we're looking for. So once you have this budgeted template and you've done some practice, you should be getting very high marks on this question. But it's all about practice. So thank you very much for watching this video. I hope it was of some help. And if you feel free to ask any questions if you have any. Thank you very much for watching.